This, right here, is $8,000 of my own money. And I'm about to do probably the dumbest thing I've ever done with it. I went out and found 8 people who know literally nothing about trading. I handed each of them $1,000, gave them a supposedly proven strategy, and then just let them loose on the most vicious financial market on the planet. This is the unedited, unfiltered story of what happened next to my money.
You've all heard this statistic, right? They say 95% of people who try this lose everything. They get absolutely chewed up and spit out by the market. And I've always had this nagging question. Is it really that impossible? Or are most people just missing something? So, I decided to run a completely unscientific and wildly irresponsible experiment. Could a bunch of total rookies, people armed with nothing more than a quick tutorial and a whole lot of hope, actually survive? Could even one of them beat the odds and walk away with a profit? What you're about to witness is the most chaotic, nerve-wracking, and painfully honest trading experiment ever put on camera. This is real money and real people hitting buttons they probably shouldn't. If you want to see me justify lighting thousands of dollars on fire for your entertainment, please do me a massive favor and just destroy that like button and subscribe right now. It is literally the only way I can convince myself to do this again. All right, let's get into the madness.
Okay, first things first, you gotta meet the victims. The contestants. 8 brave souls who replied to an online ad that definitely should have come with a few more warning labels. I picked a whole range of personalities because, honestly, I just wanted to see who would crack first. So we've got the tech bro, who was 100% sure he could just outsmart the market. The cautious student, who analyzed everything to death. The gambler, who was just looking for that one home run trade. The daydreamer, who kinda just clicked buttons. The data nerd, who literally made spreadsheets for everything. The panic seller. Oh, you'll see. The Zen master, who tried to find his inner peace. And, yes, that's right, my own mother. I gave every single one of them $1,000 cash and one single, supposedly foolproof strategy. Let the games begin.
All right, we kicked things off with 4 of the most popular and most intense strategies out there. I figured let's just throw them straight into the deep end and see what happens. Quick spoiler alert, most of them sank like a rock. So first up was scalping. Now this strategy is pure uncut chaos. You're jumping in and out of trades in seconds, sometimes minutes, trying to skim tiny little profits over and over again. It's super high stress, so naturally I gave this one to our overconfident tech bro. His exact words were, "How hard can it be? It's just algorithms." Famous last words.
And here we go. This is our live profit and loss tracker. I call it the anxiety meter. As you can see, everyone starts with a clean $1,000. And boom! Not even an hour into the experiment, my tech bro has already managed to incinerate almost $100 of my money. He was trading so ridiculously fast, he didn't realize the fees alone were just eating him alive. This is not starting well. Okay, contestant number 2, news trading. This is basically just pure gambling on the economic calendar. You wait for some huge announcement, like an interest rate decision, and you make a massive bet on which way the market is about to explode. We handed this ticking time bomb to our panic seller.
Okay, look. This is where it all went horribly wrong. The big event of the day was the US GDP release. The market expected one thing, but the real number came in as a surprise. Our traders sees the word stronger, their eyes get wide, and they just mash the buy button, just in time for the market to take a bizarre 30-second nosedive. They immediately panicked, sold at the absolute worst possible moment, and lost $250 in 12 seconds. 12 seconds. I think that's a new world record for lighting money on fire.
All right, let's move on to strategy number 3, breakout trading. Now, the idea here is actually pretty simple. You find a price level that the market just can't seem to break through, like a ceiling or a floor, and you place a huge bet that it's about to smash right through it. We gave this one to our gambler, and, well, he loved the go big or go home attitude. And this chart just perfectly captures his downfall. See, he spotted this huge breakaway gap forming, which is supposed to be the super explosive signal. He went all in, betting it would just keep cratering. But instead, the market pulled what's called a false breakout, and it snapped back in the other direction so fast it completely vaporized about half his account. Let's just watch his face in slow motion again. That right there, that is the face of deep, deep financial regret. And finally, for our first batch of traders, we have the legendary carry trade. The way I explained it to my mom was it's like a free money hack. In theory, you borrow a currency with a really low interest rate, like the Japanese yen, and you use it to buy a currency with a high interest rate, and you get paid the difference every single day just for holding it. Sounds amazing, right? What could go wrong?
Well, yeah, no. Turns out this strategy is unbelievably complex and super sensitive to global macroeconomics. To prove the point, I literally printed out this research report from Goldman Sachs on the yen carry trade, and I gave it to my mom. I asked her what she made of it. She told me it looked very complicated and figured that if the yen was involved, she should probably hedge her position by buying extra ramen noodles at the supermarket. I'm not even making that up. As you can imagine, her account did not do so well.
So after watching the first 4 contestants basically create a bonfire with my money, it was time to bring in group 2. Now, these strategies are a little bit slower, a little less, insane. And frankly, at this point, I was just hoping somebody, anybody, could just finish the week without owing me money.
Let's get an update on the old anxiety meter. And yeah, as you can see, it is just a sea of red. Our first 4 traders have managed to collectively lose over $1,000. The next 4 are about to step into the ring, still fresh at their starting balance. The pressure is seriously on.
All right, next up, trend following. The whole philosophy here is simple. Stop trying to be a genius. You see a wave, you ride it. If the market is screaming upwards, you buy. If it's falling off a cliff, you sell. You don't fight it. The trend is your friend. This seemed like a perfect fit for our Zen master and his whole go-with-the-flow vibe.
And you know what? For a hot minute, I thought we had our winner. I mean, look at this beautiful chart. He spotted this clean uptrend and just rode it perfectly. For one entire glorious day, he was up over $150. He was the chosen one. I was about to call him a trading prodigy. And then, the trend betrayed him. It just reversed violently, and he gave back every single cent of profit, and then some. So much for friendship. His friend just stabbed him right in the back. So if trend trading is for markets that are making big moves, what do you do when the market is just boring and flat? Well, that's when you use range trading. Instead of trying to ride a rocket ship, you're basically just playing financial ping pong. You sell at the top of the range, the ceiling, and you buy at the bottom, the floor, over and over again. This seemed perfect for our cautious student. And the last major strategy we tested was swing trading. This is kind of the happy medium. It's not crazy fast like scalping, but you're not holding on for months either. You're just trying to catch a swing in the market over a few days or maybe a couple of weeks. We gave this one to our data nerd who, of course, immediately went and built a spreadsheet that was more complicated than my tax filings, trying to perfectly calculate his entry and exit.
And just like that, the week was over. The dust had settled on the battlefield. It was time to bring all 8 traders back into the room and see the final damage. I honestly had no idea what to expect, but if I'm being real, I was bracing for a complete and total wipeout.
Okay, we're going to reveal these final scores one by one, from our biggest loser to our, winner, I guess. In dead last, with the truly spectacular loss, our one big win gambler. He didn't just go home, he went home with a final balance of negative $472.31. Just a complete and utter catastrophe.
And here it is, the final leaderboard. It was an absolute bloodbath. The gambler, the panic seller, the tech bro, all down hundreds of dollars. My poor mom lost $180, which I promise you I'm going to be hearing about at every family dinner for the next decade. But wait, look at the very top. The cautious student, the one who was playing that boring financial ping pong game, she finished with a profit of $12.50. After a week of total chaos, thousands of dollars in losses, one person, actually made money. This was, without a doubt, the most expensive $12.50 I have ever seen in my life. I basically lit $8,000 on fire just to discover the secret to making a profit the size of a large coffee. So what's the lesson here? Why did almost everyone fail so spectacularly? Well, here's the craziest part. I actually started digging into some of the academic research, and it turns out papers like this one say that the tools themselves, the charts, the strategies we use, they're not the problem. They actually do have a reliable track record of helping to forecast potential market moves. So if the strategies can work, what went wrong? It all comes down to this. This is the whole secret. A strategy is just a tool, like a hammer.
It's completely useless if you don't have the discipline to follow the rules, if you don't have any risk management to keep you from blowing up your account, and if you don't have the psychological strength to not panic sell like a crazy person. Our beginners had a recipe, but they had absolutely no idea how to cook. They thought the strategy was a magic formula, and the market called their bluff. So after all that carnage, one person survived. The cautious student, with the most boring strategy, walked away with a tiny little profit, which leaves us with the ultimate $100,000 question. Was she actually skilled? Or, in a market that just devours 95% of the people who try it, was she just the luckiest person in the room that week? I want to know what you think. Let me know down in the comments.